closing bell on Wall Street on this Friday. Now it's time for market domination overtime. Jared Blicker, you're going to be along in a moment to get us up to speed on the action from today's trade. I'm going to start with major averages, finishing here higher for the day. All three major averages after we got a jobs report this morning that was okay enough to satisfy most investors here, coming in with a gain of 139,000 jobs last month, unemployment rate at 4.2%, all of that equaling higher stocks and higher bond yields as well. The Dow up 443 points on the day, a little more than 1%. The S&P 500 up 1% on the day as well. And the NASDAQ composite up 1.25%. Now, as Josh pointed out earlier today, there was a headline that crossed late in the afternoon that the U.S. was going to be having a phone call with London just on forwarding those trade talks. That didn't seem to make much of a dent, even though we know that this is a market that has been hungry for positive trade headlines. So we'll see if we get some in the next few weeks as we get closer to some of the next deadlines when it comes to expiration of pauses in tariffs and such. Jared's got a closer look at today's action.
Thank you, Julie. At the end of the day, at the end of the week, we are up, and I think that is welcome news for traders. Another potential catalyst, maybe even a negative one, behind us, and the net result today is a bit of risk on action. You can see that in the NASDAQ behind me that Julie was just looking at. Here's the 5-day total, up about 2.18%. Here's the S&P 500, a bit lower, 1.5%, and the Dow below that, still looking at gains of about 1.17%. And the Russell 2000, actually the leader of the group, up over 3% here. So nice showing for the small caps. And I was also checking out the VIX just now, dropped to a 16 handle. This is the lowest. I'm going to put a year-to-date chart on. This is the lowest we've seen since 221, February 21st. That was 2 trading days after that 219 high, and that was the ultimate high, the record high of the market. And so interesting to note that. Here is the ICE of a move index. This is like the VIX of the bond market and not quite as low relatively as the VIX, but still heading in the right direction, which is down. We did see yields pop today, and this is something I'm going to be watching closely next week. We got the 10-year above 4.5% and the 30-year almost at 5% yet again. It's up 8 basis points today. That's quite a bit. We do have a big set of auctions next week, Tuesday, Wednesday, Thursday. We got the 3s, the 10s, and the 30s. And so there's going to be a lot of eyes on the bond market. If we get some weak foreign buyers there, some weak interest, well, we could see risk markets take a little bit of a tumble. But what I like today, US dollar index was also up. So the Sell America theme, not it today. And let's check out the sector action first, and we'll get back to the NASDAQ. The energy sector was leading today, up about 1.9%, followed by consumer discretionary, communication services, financials. All 4 of these outperforming the S&P 500. Tech next up on the upper row, that was up about 1%. Everything in the green there you can see. And here's the NASDAQ. Tesla bouncing back 3.67%. I think Tesla investors will take that. Broadcom taking a little bit of a tumble here. That's Tesla. Broadcom down 5%, but it was hitting record highs just a few days ago. Alphabet up 3% and a lot more red, or a lot more green than red. And let's check out the final tally on the Dow, then I'll send it back to you. Just a few staples and consumer discretionary stocks in the red here. Looks like an industrial as well with 3M, Walmart, Home Depot, McDonald's, Sherwin-Williams. But for the most part, looking at a lot of green today, and here's the 5-day total. And on this, I will send it back to you, Josh.
Thank you, Jared. Well, it's the close of trading for the week, and there's a lot to digest from the markets. We're joined now by Ross Mayfield, investment strategy analyst at Baird Wealth Management. Baird has $490 billion in assets under management. Ross, great to see you on the show today. So another day in the green here, Ross. I mean, it feels like a market that it just wants to keep grinding higher, but curious to get your take on the trading action today.
Yeah, I totally agree with you, because that was not all that impressive of a jobs report. And so for the market to kind of, rip in the way that it did, cyclical leadership, every sector higher, as we just saw, on, again, a report that was good enough, I guess is the best way you could put it. But good enough to signal that the economy is not, facing imminent recession. And all the signals in the market suggest that we're in a new bull market, that things look really good. I wouldn't be surprised if we have to take a breather here at some point in the next couple of months, but everything we've seen since that April 8th low suggests that we'll be higher 6 to 12 months from now.
Where is that bullishness coming from, Ross, do you think? I mean, when you're talking to clients, are they expressing it?
No, and I think that's part of the part of where it's coming from, right? You still have, if you look at some of the sentiment data, whether it's surveys or some of the consumer sentiment data, certainly, and even just as you mentioned, anecdotally talking to investors, there's so much anxiety over trade policy, over the path of the economy, over what this tax bill could do to the debt and deficit, that I don't think there is a majority that are ready to embrace this bull market, and that's usually where you get these really strong moves, is when eventually, traders and investors start to come in off the sidelines and contribute more fuel to that fire. So what's underpinning it? I think it's a couple of things. I mean, number one, the AI trade. Tech has been back in a leadership position since that April 8th low. There's a lot of optimism around trade deals. And then you look at what companies are reporting, and you see that coming into the year, you had a strong underlying corporate backdrop. Fundamentals were really strong. Q1 earnings were really strong. So I think there's a sense that if the administration can pull back on some of the worst of the tariff rhetoric, that the economy and companies in particular are really primed to outperform.
What are the catalysts ahead, Ross, for the market that you would have marked on your calendar?
Well, I think eventually we'll need to see some tangible progress on trade deals, right? Hey, we're having talks. Hey, we're on the phone. Like, that is great stuff for the market. The market likes to see it, but we're approaching that July 9th deadline, and we have kind of one half trade deal with the UK. Out of 60 to 70 countries that we slapped those reciprocal tariffs on April 2nd. So we need to see some tangible progress there. Obviously, the big tax bill, they want this July 4th deadline. We'll see there. That's obviously a catalyst both for bond yields in terms of debt and deficit, but also a lot of fiscal stimulus packed into that bill in terms of some of the business investment incentives. The next thing would be the Fed. I mean, I think the Fed should be thinking about cutting in July. So in June even. So those summer Fed meetings will be something to watch closely, because right now I think the market is looking at September as kind of the primary most likely place to get a Fed cut. But I think we could see the Fed come off the sidelines in no small part because this jobs report was maybe not so great under the hood.
Ross, when you're talking strategy here, I know that you like things like industrials and tech. We talk a lot about tech. We talk less about industrials. So I'm curious what is attractive about that group right now.
Yeah, well, aside from just being leadership, right? Just the technicals, the momentum, everything is there from a price perspective that you would want to see for that group. As far as the underlying drivers, I think the thing to really like about industrials is there are a lot of secular structural stories to tell about the stocks, right? You have aerospace and defense housed within industrials. Obviously, we know around the world, countries are spending more in that area. There's a lot of push from the US administration for other countries to up their defense spending. You also have the kind of reshoring theme. All of this tech and AI build out requires a lot of industrial companies to put boots on the ground and make that a reality. So as you get the reshoring and nearshoring theme, as you get the aerospace and defense spending theme, and then as you just kind of get, an economy that is clearly not headed towards recession, in my opinion, all of that's good for those kind of pro-cyclical industries. But the thing I really like about industrials is you can tell, just like AI and tech, you can tell a structural story that is tariff independent and administration independent. And those are the kind of things you kind of have to glob onto when the near-term outlook is so uncertain.
Right. There aren't too many of those examples right now, I guess. Ross, thanks a lot. Good to see you.
Thanks for having me.
U.S. goods imports plummeted in April, falling by 20% from the prior month. The numbers giving some startling insights into the challenges everyday shoppers may be facing over the next few months. For more on the looming import shortage, let's welcome in Yahoo Finance's Rick Newman for this week's rendition of Trumponomics. So, Rick, what do we learn from those numbers?
Hey, guys. Most people pay no attention to import data, export data. I do. And it's pretty startling when you see the biggest drop month to month in imports on record in data that goes back to 1992. We know why that is, because companies do not want to import stuff from other countries with the Trump tariffs in place. So a lot of companies that import stuff, there's big companies like Walmart and a bunch of very small businesses. A lot of them are just waiting. They think maybe Trump will make some of these trade deals and the current tariff rates will go lower. And if they can pay a lower tax in the future, they'd rather do that. Others, we know they are actually paying the higher tariffs because tariff revenue actually went up, even though imports went down in April and May. This is all coming to a store near you sometime soon. I mean, these seem like abstract numbers, but this is telling you that the amount of stuff coming into the United States is declining. I've been talking to some economists and other analysts who are likening this to the early days of the COVID pandemic in 2020, when there were huge disruptions in supply chains. I mean, think back to what that was like. We had some product shortages on store shelves. After a while, we saw a lot of big price increases. Now, that is not baked in yet. If Trump relents on his tariffs, then maybe it won't be like quite that bad. But if things stay like they are, we're going to start to see COVID-style shortages and price hikes within 1, 2, or 3 months.
Rick, switching gears, I have a different question for you, which is I am curious whether you think the Trump-Musk bromance breakup could impact Trump's budget bill. And here I have a note from Brian Gardner, very smart strategist over at Stifel. Here was his take, Rick. Here's what he told his clients, speaking of the bromance breakup. Brian says, unlikely to result in meaningful changes to the one big beautiful bill. He says that does not mean that some Senate Republicans won't try to reduce spending by more than what the House proposed, but must sway among Republican voters, he says, is limited. It's unlikely that he will be able to influence a legislative process that has already moved well down the tracks. You agree with Brian? Rick, disagree? What do you say?
Man, I was wondering what your out of left field question was going to be, and I'm like, Musk. It's got to be Musk, I guess, right? I think it depends what happens next. I think it depends how hard Elon Musk wants to go after this bill. And you have to keep in mind that Musk does not need to persuade 5 or 10 or 20% of Republican voters that this bill stinks. I mean, most Americans are not paying attention to this bill. They'll figure out what's in it after it passes. Who Musk is talking to is a small number of conservatives in the House and Senate who don't like the bill. They do not, almost none of them want to be the lone Republican who goes up against Trump and bucks his legislation and might bring down the whole bill. But if Musk gives them top cover, maybe something will happen. So I think, having tweeted about this bill a few times in the last week, that's not enough. If he really wants to go to the mat and kill this thing, he's going to have to keep at it. He's going to have to start talking to people in Congress and see what kind of muscle twisting he can really do. Now, do we know where this is headed? I think we have no idea. He is completely unpredictable. He's created a firestorm here. Is he just going to retreat? I think he's going to continue to agitate. I just don't know if it's going to be enough to make a difference.
Rick, always good to see you. Have a great weekend.
Bye, guys.
Stick around. Much more market domination still to come.
President Trump recently signing a proclamation that suspended the entry of foreign nationals seeking to study or to participate in exchange programs at Harvard University. While the proclamation has temporarily been blocked, the risk lingers not only for the university, but also potentially for American innovation and business creation. According to our next guest, Harvard among the top universities with the highest number of bachelor degree recipients who are also founders of unicorn startups. Here with more on what's at stake for America's startup boom, we're joined by Heidi Strebblev, professor at Stanford Graduate School of Business. Heidi, thank you for being here. So
Thank you for the invitation.
We've sort of been trying to get our hands around what could be a potential economic impact, not just for Harvard, but more broadly, the impact on innovation and business creation in the U.S. So what has your research found in terms of the numbers?
Well, if we look at all the unicorns, which are typically very successful venture capital-backed startups with a post-money valuation of at least $1 billion. So those are the most successful companies you will hear from the venture capital world. What I found out after my team and I at Stanford studied all the founders of those unicorns, then 4 out of 10, really more than 4 out of 10 of all these unicorns are foreign born. They are first-generation immigrants. And if we include second-generation immigrants, then that number will go to 7 out of 10 founders.
Ilya, it's interesting in terms of where these successful founders are coming from. It seems like per your data, India for the gold, number 1, Israel in second place. Why those two countries, Ilya? What do you think explains that?
Great question. There are different explanations. So India is a very large country with a relatively good IIT education system. And indeed, we have 90 Indian founders who came to the United States from India and then founded US-based unicorns. Israel is a high-tech nation. In fact, a very interesting statistics about Israel is that if Israel were just one of the US states, then it would be the fifth most important state in the US in terms of the number of unicorn founders.
And Ilya, what I think is interesting about what your research found is that they're not just creating startups, they are creating them here in the US, and then presumably they're staying in the US. In other words, they're not creating it and then going back to their home countries. So they're hiring here, they're innovating here, they're, again, creating businesses here.
That is correct. That is correct, which is most of the unicorns that we study were founded in the US. Some of the unicorns were founded outside the United States, but then the founders brought them here. And those founders, for the most part, staying here.
Oh, and in your research, have you found, and again, as we talked about, the Harvard University order from the White House has been temporarily blocked. But, and I don't know if you've had a chance to do new research yet, but I do wonder what you've seen in terms of any kind of chill on this kind of activity, or if foreign students are still clamoring to come to the US.
So far, I haven't seen any chill. Foreign students still would love to come to the United States to study and also to found companies. I'm seeing a lot of students at Stanford from outside the United States who would like to come and who are founding companies. Many of my students at the Stanford Graduate School of Business are from outside the United States, and they found startups. Some of these startups also becoming very, very successful venture capital-backed companies. But I think something is very important to mention is that people are coming to the United States because the US has really unique venture capital innovation ecosystem. It is in Silicon Valley, but really also beyond, just in the United States. As a result of this, if all these founders from India, from Israel, by the way, Canada is in the bronze place, and other countries would not be able to come, then it's not that they will go and found those unicorns in other countries. I think that it will be much more difficult to do so. So I think what's going to happen likely is that we will just see less innovation. Of course, the US will suffer, but also we'll see less innovation globally.
Ilya, when you say a unique venture system, what makes it unique?
It makes it unique along a number of dimensions, but one important dimension is that we have the venture capital funding throughout the entire life cycle of a startup, which is we have a lot of what I call pre-VC, pre-venture capital funding, like angels, seed funding. Then we have early stage venture funding. Then we have late mezzanine, late stage. And then we have private secondary markets and then IPO. If we go to many other countries, for example, India or Israel that I mentioned, but also Europe, but also South America, Africa, or Asia, in fact, there will be pockets of venture capital activity, angels or early stage venture capital, but there will be the entire, so to say, supply chain of venture capital funding. And I think that is very important. Another very important characteristic of the United States is the critical mass, something that economists call thick markets. That is really important. Let's think about Silicon Valley. Now, many startups fail. We'll talk about unicorns, but many startups fail. The beauty of thick markets is that, let's say you're a founder, let's say you're an employee of an early stage startup, and your startup failed. Well, in many other markets, you will have no chance to do anything else. Here, because of the thickness of the markets, you can join either a large company, say Google, or you can join another startup team. And as a result of this, we see a lot of turnover. We see a lot of turnover of people. We see a lot of turnover of ideas. And that leads to higher startup rate, higher successes, but also leads to more employment.
Ilya, this is all really interesting. I guess I would ask the other thing besides the attempt to put curbs on foreign students at some US universities. Of course, we've also seen some cuts to research funding for universities. Does that also feed into that VC pipeline?
It, of course, does. So my team and I produce what we call the Unicorn Report, which is the great details about all the American unicorns for the last 25 plus years, but also about all the unicorn investors and also unicorn founders. So just check the Unicorn Report. And what we, of course, show, perhaps not surprisingly, is that if you look at unicorn founders, then a vast majority of them did graduate from top US schools, from top 30 US schools, not just Stanford or MIT or Harvard, but from the top schools. And many of them not just got educated there, but also were affiliated there. For example, many of my colleagues at Stanford are founders of startups, and some of them founded very successful VC-backed companies that went on to become unicorns. And as a result of this, I think that especially because top American universities are what I call interdisciplinary, and I think also unique in a way that we teach and do research at the same time. For example, so I'm not doing engineering research, but I'm doing research on venture capital and innovation. When I teach my students, let's say I teach my Stanford MBA students, I teach them every single time mention my research in my class. And I think that that is a relatively unique feature of the US educational ecosystem. So research is really a part of teaching as well. If we take out research, I'm sure that our teaching is going to become much of less value add.
Ilya, thank you so much for your time. We appreciate it.
Of course, thank you.
Well, it has, of course, been a wild 24 hours of drama between Tesla CEO Elon Musk and President Donald Trump. Tesla stock closing down more than 14% yesterday before clawing back some of those losses today. For more, we're bringing in senior reporter Ali Canal for the Yahoo Finance Investor Playbook. What a ride it's been, that 14% stock drop on Thursday, eliminating $150 billion from Tesla's market cap. But we did see somewhat of a rebound today. But many investors and analysts out there are still warning that the damage both to Tesla's stock and Musk's credibility could take much longer to undo. The sell-off came after Musk slammed President Trump's controversial spending plan, calling it, quote, a disgusting abomination. Now, remember, these two were allies, confidants, some might say even friends. Almost a year ago now, Musk publicly endorsed Trump after the attempted assassination in Butler, Pennsylvania, appearing at rallies, pledging millions to a pro-Trump super PAC, and later joining the Trump administration as head of the Department of Government Efficiency, or DOGE. Musk exited that role last month, claiming he helped cut billions in government waste. But now the billionaire is turning on the president, and investors are paying the price. Here's what we heard from some Wall Street watchers who also happen to be Tesla shareholders.
This is a disaster. I mean, of epic proportion, for Tesla and SpaceX, and, whether Elon wants to accept it or not, he did help Trump get elected. It is his fault that Trump is president of the United States. And this is now a showdown. And this, as a shareholder, couldn't be worse.
So the closeness between these two men, I think is something that needed to change a little bit, right? The reality is, I think cooler heads prevail. The political noise and the other volatility is more short-term in nature, at least as far as I see it.
So two very different viewpoints there on where this feud could be heading and what it might mean for Tesla stock. And as analysts start to weigh in on all this drama, we did see Morgan Stanley's Adam Jonas reiterate his outperform rating. He's also holding firm with that 410 price target on shares, saying that the real opportunity for Tesla lies well beyond EVs, pointing to long-term upside in AI, autonomy, and yes, even space. But with that tax bill still in play, which would strip away the EV tax credits Tesla has relied on, investors may need to buckle up for a lot more volatility ahead here, guys. So I don't think we're going to see the end of this saga anytime soon.
All right. Thank you, Ali. Appreciate it. Time now for what to watch next week. We're going to start off on the earnings front. More reports coming in next week from GameStop on Tuesday, Oracle on Wednesday, and Adobe on Thursday. Oracle announcing results for the fourth quarter after the markets close. Analysts expecting Oracle's cloud unit to grow faster than expected, possibly more than 54% this quarter.
Moving over to China, President Trump announcing that U.S. representatives, including Treasury Secretary Scott Bessent, will meet their Chinese counterparts in London on Monday to continue trade talks.
And shifting gears to Tesla, Tesla planned to launch its robotaxi service in Austin next week. It would be a milestone in CEO Elon Musk's plan in reshaping the company around driverless vehicles and artificial intelligence.
Taking a look at the economy, fresh inflation data coming in starting on Wednesday with the Consumer Price Index, that's CPI. Economists forecast total CPI will hold steady at 0.2%, while core CPI ticks up to 0.3% on a month-over-month basis.
And finally, Apple's Worldwide Developers Conference. That kicks off on Monday in California. It's a critical moment for Apple as the company struggles to keep pace in the AI race. Investors will be listening closely for updates on iOS and Siri. Yahoo Finance will be on the ground in California next week, reporting from that conference.
That'll do it for today's Market Domination Overtime. Be sure to come back on Monday at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.